Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah. Like a horse I fly, better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
Hey guys, before we jump into the episode, I wanted to let you know it is brought to you by Denim. As a business owner myself, I personally know the importance of financial stability and preserving cash flow to help navigate through any freight market. With Denim's comprehensive service offering, you now have an all-in-one financial partner whose platform includes factoring, payments, freight audit, document collection management, and analytics, which help keep your business financially healthy and increase your team's time to focus on revenue-producing activities. You can also take advantage of Denim's free credit check, which they perform on all of your customers. And Denim will proactively reach out to you if they spot any signs of credit deterioration. Finally, Denim always pays your carriers first. As a broker, this is imperative to preserving your credit score in the market, which ultimately helps you become a broker of choice to your carrier partners. Are you ready to learn more? Visit denim.com to schedule a demo today. Just do me a favor and let them know that the Freight Coach sent you.
This episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, you guys, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve, so you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. We are going to jump right in, because this is my literal favorite segment of the month that we do, and it's Financial Fridays. Because if you guys are anything like me and can barely add, getting a better understanding of your financial acumen inside of your business will literally save you years and years and years and multiple gray hairs, which I have, because I need to learn more about this. So I have my good friend, Sean Smith, back on the show. Sean, thank you so much for joining me.
Hey, man, thanks for having me back. Pumped to be here.
Dude, love this show. Like this segment, you know, obviously selfishly, I love that people get a lot of value out of this, but I get a ton of value out of a lot of this as well, because, you know, I learn as I go. I'm one of those guys where you could tell me the stove is hot 1,000 times, but like, I'm still going to touch the stove unless, you know, I got to figure it out on my own.
You got to be careful out there, you know? And so we're just one voice.
Dude, that is very true. That is very true. So, dude, are you going to Manifest?
I am not, but Ben Jones and Brandon Caldwell, a couple of other folks from Denim are going to be there. We're giving a talk on building relationships, freight brokers and carriers, and how they can work better together. So, like, another great and timely topic. So that's our piece at Manifest. So if you go to Manifest, find us. I think we're on the Innovators stage, which is right in the exhibition area.
Dude, I love it. I'm glad you guys are going and putting on that talk. I was going to go in a different direction of that, but I kind of feel like I can't now, because I see all these people posting photos of going to be at Manifest. And I was thinking about having Christian on my team create one of not going to Manifest.
Not going to Manifest. You can put me in that one.
Yeah, dude, I might do that. Will Ferrell photo, or else the one where you were not me in the doppelganger thing. We'll just put both of ours. Just not
right. The Step Brothers. I was thinking the other one is the Facebook like marked safe from Manifest. Like we're not there.
Dude, let's do that. So then everybody out there who's like, oh, I have FOMO, that they know that other people have jobs as well and won't be though. So Mark, say from not
BGSA was this week. So
Yeah.
a bunch of folks were there. That was a very popular one. Those that conference in particular is great. You know, one day when I'm a CEO or a founder or something like that, I'll go there and yuck it up with everybody.
Yeah, one day I'll be there, Sean, and I'll just bring you with. All right,
Right.
You'll just come with.
Put me in on your +1. Yeah.
Yeah, exactly. So, dude, today's topic, obviously, accounting. You know, and I've said this so many times on this show, but like for me, the top couple of people that I've hired to work with me, and you know, from a contract labor perspective, my CPA, bookkeeper, and my attorney. Like those are the top 3 that I would advise every entrepreneur, founder, whomever, business leader to get in contact with right away to really help you out. Because I mean, man, I do my monthly financials every single month. I obviously fucking dad joke right there. But you know, we go through that and I go through line by line on everything, the amount of transactions that come through. And I'm just a small business ultimately at the end of the day. So I don't have a ton of transactions, but still we have our receivables, our payables, we have our monthly things and all of that. And it's like, to me, getting a better understanding about how to properly utilize the best accounting practices are imperative out there. So, I mean, dude, like, what about from you, man?
Here's something that we're coming across. So this is my favorite thing. So I'm starting to work more with our client service group towards the end of this year. And so I get to see real messages come in from our clients, real messages come in from freight brokers, kind of what's top of mind for them from a finance perspective. And, you know, like clockwork, end of December, beginning of January, hey, Denim, love to get my QuickBooks integration set up so I can sync all of my transactions from this year and tighten my books up so we can be ready for tax season, you know? And I just want to, no, don't do it. Like, don't do it. Figure out a different way. That is not the way. So I think there's a few things I wanted to hit on accounting and best practices and that sort of thing. Because we go through it, right? Like especially those who factor, if you're looking for working capital, the accounting treatment for factoring is pretty complicated, right? Because like every shipment, if you're a freight broker that comes in, here's what your shipment breaks up into. And we do all this for you behind the scenes, so you don't see it. But like from a line item perspective, you have your receivable, right? Which might have accessorials associated with it, but it rolls up into one kind of receivable. You have a payable to the carrier. Maybe it's an advance. They want to get paid tomorrow, whatever. You have an advance for you as a broker because you want to get your money faster. You have a rebate that comes in after that receivable is collected. You have a factoring fee. You might have like a servicing fee or something. So you could have 6 or so line items that move between contra assets, contra liabilities, assets, offsets, adjustments. There's a lot of accounting that goes into making these. And if people on the other our viewers out there are starting to get hives, I definitely understand kind of where you're coming from because stuff is pretty complicated. And so as people start to dig into that, you know, it's a lot. It's a lot to dig in without a CPA. Even for some CPAs who may not be used to freight, you know, it can be a bit tricky. And so we have a couple of takes for people. I know we're all about hot takes on this show, so we got a couple of hot takes that I'd love to share.
Dude, I want to hear more about this, you know, because again, I was getting anxiety when you were listing all of that stuff out there because like, dude, ultimately, man, like, like the deeper and deeper I get into business, the less and less I want to do anything but like sell, you know, like that's the shit I love to do. Sell, marketing, branding. I love talking on the podcast, interviewing people. I love doing all of that stuff. I love freight. I love going into a shipper, breaking down their operations, finding out more about, you know, like where's all their stuff going, you know, because that's the beauty of being a niche-based broker and not a jack of all trades, master of none style, one that we're going out there. But like when it comes down to this stuff, man, thank God I have a business partner who loves to do all of this stuff because otherwise, man, it would be an absolute nightmare for me to go through and handle this stuff. And I feel like that would just drive me to not want to do the job because there's parts of this stuff that come in and that's just the importance of working with the right partners as you're growing and scaling your company that have your back when it comes down to this. Because like, I don't know if you have heard this, but like Uncle Sam doesn't give a shit that you had a bad day and didn't properly line item your taxes.
Yeah, you don't get a lot of takebacks. They're those don't really come. And so here are our takes to accounting is no one's core business, right? Like unless you run an accounting firm, it's a necessity to stay alive, but it is not something that you wake up in the morning and go, man, fucking can't wait to do my books today. Like it just doesn't happen. So here's maybe you, Jolly, are the only one, but like,
no, not at all.
So here's our takes, right? So first of all, if you start a business, the like default advice for any business when you open up is to do what's called real-time accounting, which is like you want to have an expense, you add the expense line item. You have a receivable coming in, you add a receivable line item. That receivable turns into revenue, turns into a revenue line. That's what's called real-time accounting. Every single thing that comes in and out of your bank account, in and out of your business, gets recognized in a line item. That's like the standard practice. But as we all know, freight's a little special. Everything is a little extra hairy. Everything is a little extra complicated. And so just like your regular HVAC company accounting practice, just like doesn't apply the same way to those in freight, especially those that are moving at a decent clip, right? Like more than like a hobby business. And so our kind of recommendation in how we're trying to steer folks who work with us is doing this thing called batch accounting, which for those uninitiated, batch accounting takes a subledger, aka could be your factoring company, right? Could be your TMS if you do accounting in there, right? And it basically rolls up your transactions every month or week or quarter or whatever period kind of feels comfortable for you. Please don't do it once a year. If you have to, fine. But like rolls them up and gives you one set of entries for that like given period. And the reason why this is important is it simplifies your accounting a ton. A lot less manual work for your bookkeeper and yourself to be able to add all these real-time line items. It's a lot less can go wrong if you're just doing less, right? And it also simplifies the way that your month-end close sort of happens, right? So as you're doing your month-end close, you add a handful of items, it rolls things up at a really nice high level, and you can get a sense for how your business is performing without needing to wade through what can be like 5,000 entries a month, right? If you're doing a couple hundred loads a week or something, if you're like moving at a good clip in your brokerage, like it can really add up, and it can be pretty unsustainable pretty quickly. Now all of a sudden you're hiring bookkeepers, you have a second bookkeeper. It's like just simplify your life a little bit. And so for us, we're kind of steering people towards this like batch accounting method because like we did it ourselves when we opened the factoring company. We added every invoice into our QuickBooks the whole way through, and we got about halfway through. What was it? Our second year, and we were like, "Wow, this is terrible. Like we got to do something else." No, it was our take,
dude. That right there is, I mean, I just like I can't stress the importance of what you're describing right there, because it's like if you do wait for whatever reason, you're costing yourself more money with your CPA ultimately at the end of the day, because it's going to be a lot larger time commitment from their part. It's going to cost you more money on that. But ultimately though, are you getting paid on time? Are you getting your payments out on time? It is all cyclical, right? Like it's all part of the exact same flywheel of keeping your business financially healthy ultimately at the end of the day. And, when you're bringing that up, I mean, about the amount of touches that are involved in there, because like accounting from my perspective, and I've said this on the show a few times, is service is obviously number one with the customer, with the shipper. Ultimately, at the end of the day, you got to be able to service them and communicate with them. That's table stakes. The number two reason in my career why people stop working with you is you do not have your books dialed in. You don't have your accounting dialed in. You're not invoicing them properly. They don't know how to pay you, all of that stuff. Eventually, they're just going to kick you out because it's just not worth it at the end of the day for them.
Yeah, they need to be able to close their books too, right? So like this is all these transactions are two-party, right? Two-party, three-party if you're a freight broker. So like keep an eye on each piece of that, right? And like part of being a great partner is being able to have a tight cash conversion cycle, to be able to be kind of built into their process to make it seem like clockwork. If you got to hassle everybody to pay you every single time, and like we can talk about collections until we're blue in the face, but like, a delightful accounts receivable experience is possible out there, right? Like if you've got to call and cry every single time you need to get paid, it's just not a good time. And so part of that is meeting your customer where they're at, being organized, presenting information in the way that they can consume it, being professionally persistent, and being consistent. And so all those things make for steady cash in, steady cash out, steady cash reconciliation, right? All that stuff kind of comes along the same lines.
Have you found that some businesses, whether it's your guys' clients or out there, it seemingly intentionally make it hard for them to get paid from that perspective, and that causes a lot more, because like people don't know, like, yeah, you have your billing address or whatever that is, but they never actually set up like a way to get any of your receivables paid.
Yeah, we have definitely found this to be the case where people make it tricky on purpose. Or at least it seems that way, that people are making it tricky on purpose. Here's what I would say to people. It behooves you as a partner of theirs to be able to be as flexible as you need so that you can fit into whatever their system is. Now, a lot of people have really like enter stuff into my portal, add this on the subject line, the invoice has to say this, it can't say that, I only do it on Tuesdays, whatever the like kind of oddball requirements are out there for people to be able to invoice. I would say fucking do it. And if it works, great. Figure out a way to automate it. Figure out a way to like make it happen. If you're doing this stuff and they're still giving you the runaround, then I would think a little bit about who you're doing business with and whether this makes sense and whether there's enough kind of financial stability there. That's sort of the caution that I would give.
Are you guys noticing, I mean, you're talking about batch accounting and then real-time accounting and everything else. Are you guys noticing any, like, what are some certain things that people could start working on like right now, right? Because again, like I have a small business, so like snapping receipts for QuickBooks and then, itemizing it into the proper categories is pretty simple for a smaller business like me. But, for when we have more and more transactions that are coming through on top of it, like, are you guys identifying any, like what is like the number one thing that people are like, hey, let's start here on this? Maybe it is just like, hey, let's actually upload a digital trail of some of your guys' expenses and stuff like that.
Yeah, the big thing for me is like, number one, do you have a pro, right? Like, do you have an accountant on staff or a firm that you work with or a bookkeeper or whatever? Like, that's the first part. And then the second part I would say is that do you have a regular cadence? Like, do you have an operating rhythm that you and your business kind of work within? And so if that's a monthly close, great. Best case scenario. If it's a quarterly close, probably fine, honestly. Like, it's probably fine, you know? And so are you running on one of those cadences so that you can just feel like you've got a good handle on your business in a given like point in time? And so if you can make that like a regular routine, those are the things that I'd ask folks to start with. And if you find that your business is growing, your bookkeeper time is growing pretty substantially, your the time you spend with your CPA is growing pretty substantially, it might be time to be thoughtful about how many hours those folks are putting in, whether you're getting the right value from it. Are there different ways to be able to streamline that? And something like batch accounting could be a great way for you to be able to manage down, the hourly time commitments from your partners, business partners.
Yeah, it's I just look at it even from the growth trajectory in anybody's business. It's so much easier to implement these things when you're smaller and nimble than it is to like forget about it and push out, because it's always easy to throw all this other busy work off to the side until the last minute. And then it's oh shit, we got to compile all of this data. We got to find all these receipts. And then, then you're losing out on my favorite category is, actual write-offs, and having it be your operating expenses and stuff like that. No, you can't just buy shit and then just call it a write-off, you guys. But you know what I mean?
It's a write-off.
Yeah, exactly. It's a write-off. Who pays for it? The government.
It's a write-off. Yes, the write-off people. Yeah.
But I just think from a build-up perspective, as you're growing and scaling your operation, get ahead of this stuff because, again, I've said this, as well, having clean books as an entrepreneur, like that's another thing as you, to tie in kind of your personal life into your business as you're going out there and scaling. Maybe you haven't bought a home yet and you're self-employed. That's not necessarily being self-employed is not properly like looked up upon from the lending world. You're even higher risk out there. And
there's a really fine line between self-employed and unemployed.
Yeah.
And
dude, no, you're not lying, Sean. You're being very truthful with that statement, man. And me having clean books, me having a bookkeeper and all of that stuff and financials that I could provide is what got me approved for my mortgage as I was going. Because I was a first-time home buyer at 36 years old, right? And I was able to get through that entire process because I did what Sean and I were talking about literally from day one. And, again, there's some really good free accounting software out there. If you are a smaller business, Wave is a great platform to use. You can there's online payment options, credit card payment options, ACH, all of that stuff. You can go in and get something like that. If you have a little bit more of a complex business or a larger business, I would highly recommend QuickBooks. It is what I personally use inside of my operation. And then I'm sure the larger the operation that you get, there's probably a lot better platforms for people to utilize than a QuickBooks. But that's where I would start, right? Because it's like I can just envision manila envelopes stuffed with receipts and like no ledgers, no way. You're just using your business credit card or your debit card, and you're hoping that Chase Bank or your local bank can send you your financials. And I'm just sitting here trying to tell you, as somebody who's bootstrapped his way up here, Wave is a great free platform to start using if you don't have anything. QuickBooks is who I would highly recommend. And then as you grow and scale, there's, obviously there's some better stuff out there, and maybe it's just you hiring a full-time accountant for your company.
And as you're humming, right? Like, think about it this way. You have your TMS that has all your shipments, you has your dollar values in it, you have all that. Maybe you've got your factoring company that has all of your payments and obligations, and then you have your accounting system. All of a sudden, you've got a relatively complicated three-way match here, right? And so just be mindful of like where your source of truth is, like where money is coming and going, and put yourself in a position, if you find that things are conflicting, to know who you believe and who you don't, and where this information comes from. Because as you said, Jelly, right, as you start to grow, and all of a sudden money's moving a lot faster, and like, if you check your bank account in your phone app like once a week, and you start to not have a handle on what's coming and going, you really have to get a handle around where your reporting is and where data is where data is most trusted. And so I would just be thoughtful about, what reconciliation looks like for you, what data makes sense, and like, are you putting yourself in a position that's actually creating more work for really no more outsized value?
Yeah, no, I'm right there with you, man. And I also, again, long term, even if you're a fleet, right? Even if you own a trucking company, or a brokerage, however that looks, whatever your long-term business strategies are, having this stuff, it affects your financing. It affects everything out there. Your credit rate, like your credit rating, lines of credit from banks and stuff like that. Again, we have a line of credit for our brokerage we got. And again, it was due to the fact that we had clean books. We don't utilize it or anything like that, but we're always looking to improve our credit standing for our company out there. So again, all of this stuff is tied together, you guys. And I understand how big of a headache it is. Trust me, I hate doing this shit. But I also know at this time, the extreme value of knowing your money, knowing the ins and outs of this stuff. It is a completely different ball game that, I mean, again, it's so, from a content perspective, and I don't follow a lot of accountants, so there might be somebody out there who's talking about this at scale, but like, this is crucial step number 2, I would say, inside of your business. Number 1 is always going to be, generating said revenue, but number 2 is going to be your accounting practices and how you are structuring a lot of this out, because this is going to kill you financially, right? Like, if you haven't saved for taxes is coming up here, you guys. You're going to get a nice whopping $20,000, $30,000, $50,000 tax bill from the IRS on April 15th. Like, you guys got to get ahead of this stuff.
Yeah, 1,000%. And there's, I think what maybe another benefit, and I know CDN dropped this into the chat, but like another benefit of doing like a monthly close is like you can get a real honest look at the business and how things are performing. I think in the bootstrap world versus the venture back world, the math might be a little different. But like, what I would say to folks is like, be really careful if you're hiring ahead. And so just like, be really thoughtful of that, because the world can change really fast. And, if and when it does, my kind of advice on this is like, you can't really overreact Like you really can't. And like if you see a signal that's like a week, 2 weeks, 3 weeks, you're going on to a month, now you're into a second month and you're seeing a pattern that's really emerged that's like looking really concerning for you. There is a really limited cost to overreacting when growth is down or when volumes are down. So like I would think really hard about that. And it's something we talk about a lot at Denim is how are our clients doing? Because that directly impacts how we do every day, right? And so, if our clients are performing or not, or our growth is slowing or growing, like we need to be able to flex our business and our cost, right, to find us to our path to profitability as quickly as possible without doing things like interrupting service or interrupting kind of the core functions of the business every single day.
Yeah, no, I over Christmas break at my year-end financials, I was looking through everything and I was looking at all of my categories because I'm like, how do I minimize my expenses? Like how do I keep this as slim and lean as that I possibly can? And like for example, it's really nice to see your travel and entertainment category year over year, and your marketing or your subscription fees and all of that stuff. And to kind of tie it in with what Robert was saying about with staff and revenue, when your revenue is down, I looked at like how much are you paying for inside of your business that you're not actively utilizing every single month, or like if you're paying for an annual subscription on something, how many times are you actually using that? And I look and see like where can I cut from my my payables at the end of the day, because like I want to sit here and think, oh, revenue is going to be a constant fucking stream up and to the right and it's just going to be great, until it's not, right? And you need to operate in a certain manner. And the fact that there's people out there who do not look at their numbers at all and who do not understand basic accounting. And again, like nothing what Sean and I are talking about here for the majority of us is an overly complex process at all. It's actually very simple for you to start tracking a lot of this stuff. And again, that's why I mentioned Wave, QuickBooks, all of that stuff. But again, ultimately, you need to be able to look at that. Like, where can you cut? Do you know where every dollar you are spending every month is going? And I would say like that would be step number one. Is, if you have a business credit card or maybe you just have a business debit card that's out there, print out your monthly statements and see where are you spending all of your money. Because again, I want to sit here and think that revenue is always going to increase, but it's not, right? Like my revenue dropped between 2022 and 2024 for a pretty decent amount out there. And again, I was spending money at an unrealistic rate because I thought revenue is always going to be up and it's going to continue this way. And then you get hit with reality.
And here's what I would say too, like, and this is probably the most important lesson to take away from all this is like your fixed expenses, like FTEs, you have to be really, really sharp on. So like keep whatever your business is going to do this, which is fine, but like your fixed expenses better be on the bottom of the trough of that kind of set of waves, right? Because if your fixed expenses are at the crest, there's going to be a down cycle period where you're going to be really tight, right? And it's going to be really uncomfortable. And so look at ways to be able to scale headcount with volume. Can you have like elastic staffing? Is there pricing in the software that you use based on the loads that you run, right? So like try, especially in periods of high volatility, because you'll enjoy the upside of this too, try and align as much of those expenses to your actual revenue and performance every single month, and be really thoughtful about where you want to make fixed expenses and like where those need to be. Because the levels of change, right? There was a hat, I can take it on and off, a haircut, I got to cut it, but it's going to grow back, or a tattoo, which is going to be really tough to remove. So like think about how you make change and whether it's a hat, a haircut, or a tattoo, because like that really can change how you want to think about your allocation in your business.
I think that the one of the bigger financial killers to a lot of organizations out there are the monthly $75 or less expenses that come through, because you don't really think about them that much. It doesn't stand out to you. It doesn't have a triple digit on your expense report or anything like that. I would start there. And that's generally where I always go in every single month as I look at those monthly subscriptions. And then I talk to my team about that. Are we actively using this? And I don't care if it's $20 a month or $80 a month. I look at it as on an annual basis, right? $200, $500, whatever that is, that shit adds up when you're a small business and every penny counts. And I look at it, long term, I'm a small business now. I don't plan on being a small business forever. The habits that I'm incorporating today is what's going to make me a lot more money in the future that I can take and invest in growing my headcount. And then hopefully one day not have to worry about a down market and do we have to cut people at that time, because we've grown in a level pace and then we have stayed as lean as we possibly can.
Yeah, be thoughtful about those, but every dollar in, every dollar out, keep an eye on it and like have a good sense of like where you need to look to find stuff, because things could be leaking on Tonews, things could be leaking on small expenses. Like there's a bunch of different things to be leaking on cash conversion. I'm getting paid a month later than I expected. That's expensive, right? So be thoughtful about all that.
Start paying attention to all that, you guys. This is the
Good
perfect
to see you, man.
Yeah, good to see you too. New year, new us, right? And this is why we talk about
go.
accounting. And we're going to continue to do this, you guys, on a monthly basis. Sean's going to be on the show. Financial Fridays, you guys. We're here to just help out with a lot of this information. And that is going to be it. Sean, how does anybody reach out to you to find out more, man?
Find me on LinkedIn. Don't find me at Manifest, though, because I won't be there.
I won't be there. If you see anybody
find me at Manifest.
If you see anybody with an orange polo and a backwards hat on, it's not Sean or I. All right.
It's not. It's not us.
Deep fake. All right, you guys.
Find Denim at Manifest, just not me.
Love it. That's going to be it for today, you guys. As always, if you guys got value in what you heard, subscribe to the show. If you're feeling really motivated after this one, which you better be, rank the show on iTunes and Spotify, you guys, because if you saw value, that's how your network's going to see value as well.
Like and subscribe.
I love it. I appreciate you guys. I love you guys. And we'll be talking to you soon.